Ah,
Oh,
okay.
y'all just getting kicking. Okay.
Yeah. We were just shooting the breeze right now. You at home, DJ?
Yeah, I literally just put up to the house too.
Oh wow. So you're not on the computer yet then.
Oh, what? No, wait. Let's check it out.
I saw the shirt.
You see the shirt?
There we go.
Just put up.
Hey.
You according to me hop on, I need people like Comcast in here.
Hey, everybody's quitting their jobs pretty soon. Everybody.
Soon come.
Exactly.
Soon. All right. So Kurt, it's been a minute.
Oh yeah.
A minute. I don't know what you've been doing all these charts. If you've been on the charts, but
Hey,
I mean, I'm not gonna lie. The foundations definitely stay there, but I was looking at a different kind of strategy, so it's not quite the same. So now I gotta what's the word?
What strategy?
Download that.
What strategy were you doing? What strategy?
It was like how can I say? It's something similar that I've seen before. No, not no 1 minute. I ain't on Steven vibe. But it was like, how to say? It's kind of like it's like three. You ever heard something called a manipulation candle before?
Manipulation candle? What do you mean?
It's like a candle that almost like a fake out candle. If you want to say it's a fake breakout and then it comes back into it. And then the guy that was teaching it, he's like, oh yeah, this is a manipulation candle. When a manipulation candle occurs, after that, that's pretty much you call it smart money traders versus retail traders. Smart money, hedge funds, big banks, all them kind of people.
Okay, so smart money concepts, that's what you're trading?
Yeah. Okay,
that's actually a good strategy. What did you have, like what issues did you have with it exactly?
I think, okay, I had to say the setup. The setup for those take a long time, depending on the time frame you on. And then the guy, he didn't really teach how to. He never gave a strong foundation of it. He kind of just gave the basics of it, but he never showed how to enter. He never showed what to look for entries. Okay, hey, when you see an engulfing candle, get in, or hey, when it gets to this point, get in. You know what I'm saying? He never showed it not one time in the whole entire course. I'm like, what the heck? Like not once. I'm like, okay, that's weird. I'm like, you just gotta know.
Did you switch over to smart money concepts because price action wasn't working for you, or you just like what was the reason for going to a different strategy? Obviously, because the one you had wasn't working, right?
Yeah, I think the consistency.
Okay.
Yeah, that's what it was.
Okay, what's your main pair?
GU.
GU?
Mm-hmm.
Okay. All right, so we're gonna look at GU. All right. So how comfortable are you with doing an actual breakdown? How do you feel about that?
Pretty good, I would say.
So what issues are you having? Just entries or holding your trades or what?
I haven't done like a full breakdown in a while, but from going back to your course, it's all come back to me for the most part. So I would say, I think the entries, I know there's like two different ways to enter. You either like the impulse entry or after you get like a candle closing confirmation entry,
Yes. Okay.
So right.
Okay. In terms of an actual breakdown, are you able to like go from time frame to time frame and actually analyze what you're looking at and then look at what you see to come up with an actual like trade idea? How comfortable are you with doing that?
I'll say about a 6, 7. It's been a while since I've done that particular way. So yeah, I say about 6 or 7.
Okay.
But like the knowledge is still there. I was kind of just gotta re-implement it,
Okay. Can you see my screen?
Yeah.
Okay.
See you on daily.
So we've done a lot of trainings, you and I, right?
Mm-hmm.
And you seem like you understand it from when we do the breakdowns, right?
Mm-hmm.
and we do the whole bar replay thing. We break it down. We look at it from candle to candle, structure, this and that, this and that. So you should have, a decent idea of what to look for. Can you see? You can see my screen, right?
Yeah.
Okay, we're looking at GU right now. Okay, GU is a clean pair, right? It gives you cake setups, right? Higher highs, higher lows, lower highs, lower lows, all that stuff. Okay, looking at GU right now, just looking at it right now on the daily time frame. What do you? What's the trend that you see right now? Just off the daily.
Downtrend.
A downtrend. Okay. So first thing you do when you come to the charts is you open up your charts and you look at the chart as a whole. You don't look at just where price is now. You look at the chart work as a whole and you say to yourself, what has the market been doing? What is it doing? Because what's the market going to do? It's going to do exactly what it did in the past, in the past. So you have to, so all right, let me pull my bars in, let me pull my charts in, put my numbers down. Let me look and see. Okay, so for a long time, we've been trending down. The market has been, or should I say the Great Britain pound has been dropping. Okay, because we know the first pair is the dominant pair, the second pair is the secondary. So if the market is dropping bearish, that means that first dominant pair is the weaker currency compared to the, okay, which means the US dollar is stronger than the pound right now. So it means the market is dropping. Okay. So if I see the market is dropping, I'm going to trade what I see. I'm not going to trade what I think is going to happen. Now the market moves in waves, right? Up, down, up, down, up, down. You got to know when to catch the market in the right direction for you to win a trade. But with that being said, you still have to have an overall bias for the market. So if I'm looking at GU right now and I see the market is dropping, automatically, what should I be thinking to look for?
Sales.
To look for sales. That's it. To look for sales. At that point, once you know what you're looking for overall, now you can start down and trying to figure out what are the best areas to look for sales. Now, rule of thumb is what? You sell high and you buy low. So if you're selling from a high, you're looking for resistances to be formed. You're waiting for resistance. Once you have your resistance levels, at that point, you're trying to analyze, hey, is this a good entry point or should I wait for another resistance to be formed to give me more confirmation? And then once you find that, what are my next confirmations? Once my resistance is formed, then I need what? I need my rejection levels. I need my supports to be broken. I need to drop down from time frame to time frame to tell me, what am I looking for? How do I know when to enter the market? How do I know when to take an actual trade? That's the hard
confirmations.
That's the hard part that everybody has trouble with, right? They know what the market is doing, they just don't know when, right? You ever see the market just dropping, and as soon as you jump in, it stops dropping.
Change up on you.
It happens to everybody, and everybody's like, "Oh shit, the market is watching me." The market is watching me. It's not watching you. It's watching you, and about a billion other traders that's doing the same shit.
Exactly.
So the market sees that. The market sees if it's dropping and a bunch of sell orders are smacking the market, the market's gonna be like, whoa, hold up. All these people trying to jump in and get profits? Nah, let's reverse it a little bit. Because remember, they make money off of us, off of retail trading. Every time you win a trade, somebody's losing. Every time you lose, somebody won. Right? So
that's why I say I always try to trade with the banks instead of against the banks.
Not necessarily, because remember, you can look at it from that point of view, but I don't like to say the banks because it gives people the wrong idea. What I like to say is just the trend. Just go with the trend. You just gotta get the right entry. That's it. Any trade is good as long as you get a good entry. Because if you won the trade, does it matter where you entered?
No. As long as you're going like in the right direction, yeah, true.
If you won the trade, you got a good entry. What is that? If you lost,
yeah, I get that.
Okay.
I'll say if you lost, you might get your bias might have been right, but it was bad entry.
Exactly. And when it comes to entries, the only thing that matters is patience. The only thing that matters is patience. Like this morning in my signal group, we were looking at gold, right? Gold was dropping. Gold had moved a lot during London session, right? So gold was dropping. Let me look at it real quick right here. Let me show you. okay? We were looking at gold this morning. This is where gold was this morning. Gold was doing this. See this move right here? Gold was making another leg to come down and make a new low, right? So if I know price is dropping and it's moving at momentum, why would I jump in for sells? That's, you know what that is? That's FOMO. That's straight FOMO. That's like, oh shit, the market is pushing. I missed my entry. Let me just try to catch the wave. And that's where people get slapped. That's where they get in and they get pounded every time because they think that the market is just going to keep going. It cannot do that. If you practice patience and you wait for your confirmations and you follow market structure, Kirk, you're going to win every time. You're going to win every time. And by when I say win, I don't mean you're going to win every single trade. I mean, you're going to win when it comes to your psychology and your discipline. Because if you're able to actually come to the charts, to sit down and see a move playing out and be able to sit on your hands, you won. You won. Because most people can't do that. Most people come to the charts and they see the move playing out, and guess what? They want to jump right in. They feel like they have to be in a trade that, oh shit, the market is pushing. I'm going to miss the move. I'm going to miss the move. You're not going to miss shit. Guess what? Because the market has at some point, it has to take a breather. It has to retrace, or it's going to come down and do something else. And even if it does push down, let's say the market let's say I came to the market this morning and gold was doing this drop and it just tanked. Guess what? I'm okay. I'm okay with that. You know why? Because for every time that you have FOMO and you jump in the market, you're gonna fuck up your psychology to the point where now you don't have no patience. It's gonna be like, damn, if I jump in now and I get smacked, the next time it happens, I'm not gonna jump in.
You're gonna be scared.
I'm gonna be scared. So guess what? Now your head is messed up. Now your psychology is fucked up because now all you're thinking about is that last time you did that and the market smacked you. So be okay with missing out on a move because you're waiting for what you want to see happen. You got to have a plan for every trade. When I come to the charts every day, I have a plan. Once I do my breakdown, I say I want to see 1, 2, 3 things. If I see 1, 2, 3, I'm getting in. I'm not second guessing myself. I'm not doubting. I'm not saying to myself, you know what? Yeah, I have this support right here. And if I see price reject it, I'm going to take the buys. But then you see price reject it and you don't take the buys. What was the point of having a plan?
Yeah, not true.
You have
that you're not secure and trusting your own plan.
Exactly. You have to be confident in your knowledge, Kirk. That's all that is. If you know you've been studying and you know you've been back testing and you know what to look for when you're on the chart, you should have no fear at all in entering a trade. You know, when it comes to trading, there's a possibility that you might lose the trade, but you got to be okay with that. How are you okay with 2 things? You're okay with it with your knowledge of the market, and you're okay with it because you know how much you want to risk. If your risk is good, you're chilling. But if you over leverage and a couple pips drawdown, now the confidence in the move goes out the window now. Because you're like, man, I've seen this move happen. I know this is going to happen. I've seen it happen. But because I over leveraged and the move is going against me now I'm not thinking about the confidence in the move. I'm thinking about how much money am I at a loss right now? How much red am I deep in right now? That affects your psychology. I'm telling you to the T. I did not become profitable until I stopped over leveraging. Stop. If you're over leveraging, stop over leveraging. I promise you, you will see a fucking 360 turn in your trading if you stop over leveraging, because now you can now chill about your risk on the trade because you're risking what you're willing to lose. And now you can be confident and let the move play out. Because we're not always going to get the perfect entry. Sometimes you're going to have to chill and draw down for a little bit until you let the move play out. You can't always get a wick entry. You can't always get a body entry. You have to wait sometimes for more confirmation. But I would rather wait for more confirmation than get in hoping that it's going to go my way and then it doesn't go my way. But when I come to the charts and I make a plan, I follow my plan. I told my signal group this morning, guys, this is going to drop right here. I said the market is still pushing. I'm looking for sells, but the market is still pushing. But what do I know about gold? Because I've traded gold for so long. What do I know? Gold has deep retracements, and when it retraces, it gives you a good move, a good amount of pips. On a retracement, you could catch a good 80 pips on a retracement on gold. That's how volatile that pair is. So why would I stand there and wait on gold to retrace 80 pips and then look for the sells? What if the sells don't come that session? You want to go with the trend, obviously, but when you have experience with a certain pair, you can take counter trend trades. You got to know when to get in and when to get out. Gold pushed up, how many pips? Gold pushed up from our entry to the highest high was, look at that, 84 pips. It pushed up, you know where I closed out at? 15.
What, 10? Oh.
15.
Yeah.
I had 2 10 lots open. I closed out on 15 pips. I only made 3K when I could have made over 20K today on this trade if I would have held. But guess what?
Like I said, discipline.
I'm good. I'm disciplined. You know why? Because my rules say, Charlene, do not hold counter trend trades for too long.
Dangerous.
You don't know when it's gonna reverse. No. If that was a sell, I would have held. Would I have held for 80 pips? Probably not. But if that was a sell, I would have held for more than 15 pips. But because it's a buy in a selling market, I want to get in and I want to get out. Get my pips and get out.
What about just moving your stop loss into stop profit after like?
I can do that too. I can do that too, but I don't like giving back profits. I've been conservative with that lately. I don't like giving back profits. I'd rather take my money and be done for the day and get on with my day. Okay, so first thing I want you to do when you come to the charts, you identify the trend. You open up the entire chart. You bring everything. You identify
on daily, right?
Yes, on the daily. You can look at the weekly if you want to, but weekly doesn't really matter. Okay. Look at the charts. You look at your daily time frame. What? And not just daily that day. No, everything.
Yeah.
Everything. As a whole. What is the market doing? Is it dropping or is it pushing up? If it's dropping, first thing that should be in your mind is, oh shit, market is dropping. I need to be looking for sells. Let's go back to G. Okay. Market is dropping. I need to be looking for sells. Okay, cool. I know I need to be looking for sells. What's the next thing I need to be looking for? My key levels. Key levels, bank levels, institutional levels, whatever the fuck you want to call it. They're all the same shit. But at the end of the day, those levels are going to tell you when to enter and when to get out. Because why? Those key levels are very important on the high time frames because price comes back to them like a magnet. Every single time, like cake. It may not come back today, it may not come back tomorrow. But one of these days, price is going to shoot up and it's going to shoot down and it's going to smack that key level. When it smacks that key level, it's going to reject it or it's going to shoot right through. Either way, it's going to come back to that level. Okay, I'll give you an example. I'm looking at one right now on GU. Okay, see where price is right here? Price is 1.1839. If I draw a key level from this support all the way over, what do I see? Support, support. Price broke support, and what did it do? What did it do?
Created, well, it broke support?
Starts with an R.
Oh, resistance, yeah. But I'm saying, okay, I see.
But what did it do? What did it do?
It sat down.
Yeah, but when it came back, when price comes back to a level that is tested.
Oh, retested.
A retest, exactly. Okay, it retested it, and look how many days it tested this level for. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. It retested over almost 2 weeks. It retested that level. Now, does it mean that it's going to test it to the T? No, because look at price. Price is just lingering in this area. But if you look here, price stopped right here, broke, deep retest, never created new highs. Look at what happened after the price, after we had this bearish drop, right? Bearish engulfing. Price pushed up, had a deep retest. Price never created another high. It just started creating lows right here. Price made a high here. Then it made another one below. And then when it finally broke back below support, what did we do? We tanked.
Drop down, yeah.
We tanked from that level. And then look at the next 2 times price came back to this price level, tapped, down, tapped, drop. Double top action going on here, right? So we have a drop right here. Based off market structure, if I use my handy dandy arrows, what's
high, low? Well, lower high, sorry. Yeah, lower high, lower low, lower high, lower low.
Exactly, right? And now if I'm looking at the chart as a whole, right? And I see that price made a high, a low, a high, a low. Let me use my trend line. What's my trend line telling me right here? Boom, boom, boom. I have a downtrend. I have a high here. I know price needs to come to this area. What level makes sense for price to come back to that it needs to respect? Maybe the last area that price made support. Maybe it wants to test that because I know if price held support at one area, it needs to act as a newfound level of what?
Resistance.
Resistance, exactly. And once it holds that resistance, where are we going?
Back down.
Back down, back down. So what area is the best place for me to put my support? The last major level of support, which is right here.
The neckline.
Exactly. At the what? You said it.
Neckline.
How many confirmations do we have here to take this clean ass trade?
All you gotta do is wait for it to get there, and then depending on what type of candle you get,
Exactly.
you
But
make your move.
here's another thing, right? If we know that price has already made 1, 2, 3 lows, it needs to make another low, which it already did here. Can I take a counter trend trade here? Can I take some buys up here? Yeah.
Yeah. If you start, I guess, if price breaks or engulfs or breaks that that previous daily bearish candle.
If it does, right, but you don't wait, you don't want it to break on the daily because you're not going to get the best entry. The daily is large of a time frame to wait for that. So I would say the best entry would be to look for would be either on the 1 hour or even your 4 hour maybe. Because in that case, you have now supports being formed. If support is being formed and price is respecting support, especially on the 4 hour time frame, and you have an engulfing, that's all the confirmation you need to take that buy up. But you know you can't hold the buy because it's a trend trade. Okay. All right. So we see price pushing down right now. I'm not a psychic, so I don't have, any prior knowledge that this is going to push up, but I'll bet money if I wake up tomorrow morning and I come to the charts, this is going to start pushing bullish. And we're going to start seeing buys start pushing, especially if we're looking at GU on the daily time frame. And look at this daily candle right here. Look at that daily candle. It opened up right where the last daily candle closed. Already left the bottom wick. It's already pushing up. If we go to the 4 hour, let's see what it looks like on the 4. Look at that. 4 hour is already broken the high of the previous 4 hour candle. So do you see why I say to look for it more on the 4 hour time frame?
Yeah.
Okay, very good.
But then it is safe to assume that it's going back up if it hasn't broken the high. Okay, you see like the previous resistance area with like about 4 candles right there.
Right here?
Yeah, right there. Would that be the safe spot to like after that break? Then okay, now it looks like okay, now you're going back up. You know what I'm saying?
That's a conservative entry. An aggressive entry would be down here. But if you got in down here, you're literally entering on the wick, on the daily of the wick, which is, that's a sniper entry. That's a sniper entry. Okay. So, but look at the 4 hour, bro. Look at this big ass drop. You don't think price got to retrace?
Oh, yeah, definitely.
It got to. It's not going to keep dropping like this. It has to retrace. This is a gigantic drop. The market has to pull back. At the very least, look at the risk reward. Look at the risk to reward. Let's say I entered right here. Fuck it. Let's say I entered right there and I put my stops below those lows. That's a 29 pip stop for a 60 pip TP. What's that? 1 to 3?
Yeah.
That's a pretty good risk reward. Okay, that's a very, very good risk reward right there. Okay, so also sometimes it's not just about catching the right trade. Look at the risk to reward. Sometimes if you're afraid to enter the market in a certain trade in a certain area, calculate your risk to reward and then pick your lot size at that point. Pick your lot size. Say, you know what? This is a counter trend trade. I'm not too sure about this setup. I feel like it's gonna go the other way. I don't want to miss out on that opportunity. So you know what? I'm just gonna reduce my risk, but I'm still gonna take this setup. I just know I'm not going to hold it for very long. Okay. So let's continue breaking it down, right? So we see a drop happening here. So basically it's Asian sessions, you know, kind of slow, but this 4-hour candle has 17 minutes left in it. 17 minutes, not a lot of movement in this candle, right? But we still see it pushing bullish. It's already tried to push up. Big deal. If the next candle breaks its own high, if the next candle opens up and breaks its own, the next 17 minutes here, if the next 4-hour candle opens up and breaks this candle's high, what confirmations do I have to take these buys? First confirmation, we have a large wick rejection on not this candle, but this candle's low, because wicks are important. Okay, wicks tell you a lot about what's happening. Okay, I know I have a 4-hour support right here. Price tapped it once and it closed above on the 4-hour time frame. Because now we're doing candle body analysis. We're not doing structure right now. We're just looking at the candles. You know why? Every candle tells a story. Every candle tells you exactly what it wants to do and what the next candle potentially will do. So the bodies matter and the wicks matter. Okay. So I have this 4-hour candle, this big ass engulfing candle that just dropped below all the way down to what's this price level? 1.17435. Next candle broke the low, broke support, came down, barely came down to where this candle came down to, and it also closed above. The next candle opened up bullish, opened where the last candle closed, and it's already broken the previous 4-hour candle's high. Do I see some bullish pressure kind of creeping up here? Yeah. Do I have enough confirmation yet? No. I'd like to wait for this candle to close completely. And if it closes above this high, guess what I'm doing? Looking for buys. And guess where I'm putting my stops? I'm putting my stops below that candle's body, not the wick, below the body. You know why? Because if it even tries to break its own low and come back down, I want to get out. Okay, I'm getting out because I need momentum to continue pushing. Exactly. If it ain't pushing, she ain't ready yet. So it might come down and start playing around at support, tap, 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 especially since it's Asian session. There's not a lot of volume in Asian session. Now, if that was New York session or London, that baby, she gonna push and she's gone. But Asian like to play around a little bit. So you know you want to be conservative with your stops. Because price can just as easily come right on down here, play, leave a wick, smack your stop loss, and then turn around and go up. But what confirmations do I have? I have a retracement that needs to be done. I have a candle rejection. I have a bullish close above. And what's this candle signifying? What's my favorite word for when you see
Green traffic?
Exactly. Boom, right there. If you have that, candles are always doing what? Looking what?
Left.
They're always looking left. Exactly. So when it breaks this high and it looks up and it looks left, oh, nothing here. I guess I can go. I guess I can go. And if we're talking about resistance and support, where is most likely price going to come back to? It's going to tap this eventually. It's going to tap it. Whether it goes down or it goes up, either way, it's going to tap this area.
TP.
So can you make that your TP? Yeah. It's going to smack your TP. Now that's a conservative trade. Now you can hold it all the way, you know, up if you want to, but you know, we're not swing traders out here. Okay. So, but can you eat good off 60 pips?
Yeah.
A one lot is $600. A 0.50 is $300. That's not bad. It's not bad. Okay.
No.
Yeah. So, all right. So what we're going to do is we're going to do some back testing. Okay. We're going to do some back testing here because I want to see where you are with your analysis. Now you see all these lines on my chart. It looks a hot mess, right? It looks a hot mess to you, right? But all of these lines have a meaning. They all mean something. Okay. Your chart needs to look like this because you're starting out your analysis on the daily. You're moving down to the 4-hour. We haven't even dropped down to the 30 yet. And we already have a basic idea of what we think is going to happen. The daily time frame and the 4-hour time frame is your bread and butter. Your bread and butter. When I trade, sometimes I don't even look at the 1 hour. I'll look at the daily, break down my daily, my 4-hour, and I'll drop right down to the 15 or the 30 and look for my entries. Look for my levels. Where do I want to see price come back to? Then I want to look for my trades. I don't need to look at the 1 hour. My 4 hours is giving me everything I need. Everything I need to look for a trade. You need to be able to analyze your daily and your 4-hour time frame in the same. And if your daily and your 4-hour contradict each other, what do you need to do?
Higher time frame.
Nope.
Reevaluate.
Nope. Nice try. If you're analyzing, let me ask you a question. If you're analyzing your chart and your daily says buy and your 4-hour says sell, what are you doing? What should you do at that point? You should do what? It's one word and it starts with a W.
Wait.
Wait. Exactly. You know why? Because you need more confirmation. Because daily is saying sell, your 4-hour is saying buy. Well, how do you know which one to go with? They both matter. So how do you know which one to go with? So now what you're going to wait a little longer and see which one gives you more confirmation. So if my daily is saying buy and my 4-hour is saying sell, I don't know what's happening, but I see the market dropping. I see a bearish engulfing. So which time frame has more confirmation now? My 4-hour time frame, because the market is dropping. So now I know the market is dropping. I know I need to wait for a resistance to be formed. I need price to respect that resistance, start breaking lows, breaking supports, and then I start looking for my sell entries on your 15-minute or your 30-minute. Okay. It's I hate to use the word easy, but it's that simple. It really, really is. I mean, your analysis has to come from your higher time frame, your 4-hour and your daily time frame. I'm telling you, look at what we did. We analyzed the whole chart just to get a move for tonight. To get tonight's move, tonight, which is 8:49, almost 9 o'clock at night, tonight's move, which is 60 fucking pips, nothing compared to the whole market. We had to analyze the entire chart, days and days and days and days of data to tell us, hey, yeah, I need to be looking for this for tonight after all that happened in the last few weeks. I'm telling you, Kirk, if you backtest and you backtest like a crazy person and you train your eyes to see certain things, it's going to become like second nature to you. You're going to be able to do a breakdown in 5 minutes. When I wake up in the morning, I do gold. Gold takes me less than 2 minutes to break down. And I'm breaking down days of data. I took a trade today, right? And today's Monday. Tomorrow's Tuesday. I'm going to wake up and trade. But I'm not just analyzing for Tuesday or yesterday. I'm analyzing for yesterday, for today, for the day before, the day before, the day before, the day before, and the day before that. Because all of that matters. So let's do some back testing. I'm gonna get you right. I'm gonna get you right because I don't think it's your knowledge that's the issue. I think it's your confidence level that's bugging you right now. I think it's more psychology because you know what you're doing. You've been trading for what, 3 years now? 4 years?
Yeah, let me see, 2018. Yeah, 18. Yeah, so 4 years. Yeah.
So yeah, in 4 years, nah, it's not a knowledge issue. It's just confidence. It's just confidence, and your confidence comes from more
practice and backtesting.
Yeah, just practice. Be honest with me. How many days a week are you actually on the charts?
That's the thing. I used to be on it heavy when I was learning the new technique.
Mm-hmm.
But as far as backtesting, not much.
Not much backtesting. Okay.
Yeah.
So that's where you fucking up at. You're not backtesting. Okay. So I'm gonna give you a crash course tonight. Crash course in backtesting. Okay. I'm gonna make it look very, very, very simple for you. And I'm gonna break down every single move I take. every candle that moves, we're gonna analyze every candle from the top of the wick to the bottom of the candle, top of the head to the bottom of the feet. Okay, we're gonna analyze it, and I'm gonna show you exactly what to look for. Okay, because it's not difficult at all. Okay, so right now we're on the daily time frame, and we are on October 29th of 2018. So this is what the market was doing in October of 2018. We had a little bit of a drop, and we had two pullbacks up here. Doesn't this look similar to what happened today?
With the double top
Yeah,
neckline. Yep.
it looks very similar, right? Because what? The market does the same shit over and over and over again. All right. So first thing I want to do is I want to find out what is the trend. So based on the chart we're looking at here, what's the overall trend?
It was an uptrend, and that uptrend changed to a downtrend. Now it's a downtrend.
Okay. Now it's a downtrend.
But even on a bigger scale, it was a overall downtrend, and then you had a bigger retracement, and now the correction is happening now.
Yes, you can say that. You can say that. That's fine. Okay. So the next thing, once you identify your trend and you say to yourself, okay, the market is dropping, I need to be looking for sells. My bias is overall sells. Okay. Even if the market is dropping for sells, the next thing your eyes should be going to or should be lasering on is your key levels, right? Where are my key levels? Where is price tapping the most? Where do I see the most reaction happening? Where do I see wick rejections or resistances being rejected? When was the last time price was at the last high? Look at this high up here and this high here. If I put a line here, look at that. Price tapped this level twice, and both times it tapped, what did it do?
Shot back down.
It tanked. Okay, so guess what? Price is very far away from this level now, but price was up here, and I look left. Immediately, I should be thinking, hold up. The last time price was in this area, it rejected and fell hard. So there's something over here that's potentially keeping price from pushing above. So I know it doesn't mean look for sells automatically. It doesn't mean that. It just means to keep in the back of your mind that the last time price was up here, it rejected. So I'm going to be ever vigilant that when I see price come to that price level or in that area, I'm going to be looking for either a strong break on my high time frames, or I'm going to be looking for a strong rejection for price to come back down. Either way, I'm going to eat off that move because I was waiting for my confirmation. So now, I know that price rejected twice off that area. Where's my key levels? Well, when I look for key levels and the market is dropping, I know I need to be looking for resistances, right? So I look for my last major resistance because I know I need price to respect that level for it to get its ass back down. So where are my last major resistance levels? Right here.
Top of the double top.
Exactly. Top of the double top, because price came up here twice and rejected. And if I pull this all the way over, what do you know? It held resistance, support, 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 resistance, resistance, resistance. Key level, held my key level, right? I'm doing all this on the daily. I haven't even come down to the 4 hour yet. This is all on the daily, okay? So I slide my chart over, pull my numbers up. Now, where's my support? Because if I'm looking for sells, I need a TP, right? All right, so pull it all the way across. Is this making sense to you? Look at that. Tap, 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 tap. What are the chances this is going to come down here? Pretty high, right?
Yeah.
Pretty high. This is going to drop. This is a fucking cake textbook trade right here. Okay. So I know that I have a high. Look at, did this high break this high?
Nope.
No, it did not. So it broke. And what do we have here? We have this high, then this high. And then price started making lower highs. Lower low, lower high, lower low, lower high, lower low, lower high. Now we have price back down here. And the last time price was in this area, if we look left, price was holding and it pushed up. But now we have this engulfing candle here. We have a resistance, and this candle this daily candle has already broken that low. Now, before we take sells, right? Because you can't enter off of FOMO, we have to wait and see. Look at the previous candle. Look at that, how that candle closed. That looks like a doji, right? You got to ask yourself, why did that candle close like that? The wick is bigger than the body. Whenever I see candles where the wicks are bigger than the bodies, I don't even touch that candle. I'm waiting on the next
And
candle.
that's indecision.
It's an indecision candle. You don't know what's going to happen at that point. However, though, you still have a resistance that formed. This is a resistance right here, okay? You have a pullback here and a resistance and a break. So this is a textbook trade for you to take sells here, right? So I got to ask myself, can this candle reject as well? Because at one point, this candle that closed like this looked like that. Did it not?
Yeah.
It looked like that at one point, and then it rejected and it closed doji. So you always want to keep that in mind because candles are always looking left. Think about it. Look at where this candle rejected from. Forget about this candle here. Look at where this one rejected from. Looking all the way left.
The previous support.
Previous support. And it rejected that previous support. This candle, so for 2 times, it tried to break support. Could not break that support. It closed above. Now this next candle is trying to break. Maybe it could break with volume, right? Because we need volume in the market. So if you have New York open, London open, you know this market is going to start pumping, and you're going to start getting opportunities to take a trade, right? You don't want to enter prematurely. So what we got to do? We got to drop down to the 4 hours.
4 hour.
Right? But before we do that, I'm going to mark off my daily high, and I'm going to mark off my daily low, because I need price to respect a certain area, okay? Also, third thing is a lot of analysis that goes into this, right? Third thing I'm looking for is, what do we have here? We have price that made a nice big drop. So what should we expect? A what?
Retracement.
Retracement. A retracement. Okay. So let's mark off our daily high. So we have a daily high right there. Price has already broken. That's okay. It's broken it, but it's still supposed to be low. And then we have our daily low right there. Previous daily low. How many pips is in between these zones here? There are 62 pips in between. Not a very big zone. It's not big at all. If it was 100 or so, okay, that's pretty big, but that's not big. Okay, so now we're gonna go to the 4 hour. Okay, let's see what the 4 hour is telling us. Okay, so we have a big drop here. Drop up, drop up, drop, kind of went up, right? Tried to come up, now it's rejecting. What do you see happening on the 4 hour right here? What do you see right here?
Ranging.
A range, exactly. You see a range. So we gotta wait for price to bust up or for price
or
to
down.
Okay, very good, very good. So what are we gonna do? So we're gonna wait. But our overall bias is what?
Sell still.
For sales, exactly. So if price breaks this low here, what should we be looking for? Take entries, correct? Correct. Where would your stop loss be if you took a sell down here?
Above the body of that candle. Push it down.
Above the body of the candle that it pushes down from?
Yeah.
Okay. Okay.
Or well, yeah, conservative stop loss would be to put it above the resistance level. That bullish candle with the big wick.
No.
That'd be that's much though. That's a lot.
That you can't. That's too big of a stop loss. You can't put that. Your stop, if you're in a range and you're looking for an entry at the break of the range, your stop loss needs to be back inside that range, because if price comes back in there, it's probably going to play around again. So do you want to be sitting in limbo and drawdown the whole time? No.
Nah.
So your stop loss needs to be back inside the range. That's it. There's no ifs, ands, or buts about it. That's where your stop loss needs to be. Okay. Oh, I have an H4 resistance here. And I have an H4 support and a daily support down here. So let's go to the 1 hour so we can catch a move. What time is it? It is 4 in the afternoon. So low volume, right? Market's about to close. Move this thing along to 4 in the morning, 3 in the morning. So London session. So let's wait till we get a break of the range. Okay. So check this out, right? we have this break, right? Price tried to break, right? This is our daily support. This is a daily and a 4-hour level. Your bias is already for sells. What do you see price doing here? Made a high, we made a high, and we made a low. Whenever you have a range, there is still structure within a structure. Understand? You don't just look at it and say, oh shit, I have a range, well, fuck it. I'm gonna wait till I just see a confirmation. No, try to understand what the market is telling you inside of the range as well. Okay, so I see that the range is, market is dropping, made a high. We were never able to come back up here. Look at how many times on the 1 hour we tapped this area. Once we dropped, we have not been able to come back up here. Then what do you have here? Boom, a drop. So more than likely, the market is most likely going to do what at this point?
Continue down.
Going to continue down. But do we know for sure if it's going to continue? No, because we need a confirmation of a break. Okay. So in this case, we have to wait. We have to wait. Boom. Drop.
There we go. Well.
Drop. But that's okay. That's okay. It's back in the range, right? It dropped and it came back in the range. This is on the 1 hour time frame. Guess what? If this candle drops like this and I get a close back inside the range, if this thing even tries to break the low again, guess what I'm doing?
Entering.
I'm entering sells. I'm entering sells. Okay.
But you entering after the break of the bearish candle low?
After the break of the body, right there. After
okay.
that's where my stop loss is going. Right there. Right there.
Okay.
Did we just win that trade?
Yeah.
We just win that trade. Exactly. Exactly. The reason why is because you already had price try to break support. Look how far this move came down before it closed back up. It closed back up, but this candle closed where the last candle opened. Next candle didn't even break the high. Did not even break the high. Look at my stop loss. Look at this.
Okay, so say for instance that bullish candle, because the previous candle broke the daily low, it brought the 4 hour low.
Yes.
So this example would have been an impulse entry if that bullish candle broke the low of that previous bearish candle.
You talking about this?
Yeah. Although it closed bullish, technically it did break the low of the previous candle. You know what I'm saying? So would that have been an entry technically?
Yes. Look where I put my entry. At the break of what? At the break of support.
Okay.
I put my stop loss back inside the range. Right back inside the range. If it even tries to come back up and breaks the high, remember what I said. Your trade should be back inside the range. If this candle that breaks the high of the previous candle's high, I don't want to be back in that trade. You need your highs to be respected if you're looking for sells. And remember, this is a 1 hour time frame. So 1 hour candle. So if you break that high, you better leave a little ass wick. Otherwise, I'm getting the hell out. I'm getting out. I'm not going to hold that hoping that it turns around and comes my way. You have to get out of that.
Okay.
So our stop loss was 15 pips. Our TP was 50 pips. That's a pretty good trade if you ask me.
Nah, definitely.
Exactly. Pretty good trade. Okay. So now let's take this off. Okay. We won that trade. All right. Very good trade. So now price has broken below. So we have a bearish engulfing. And now what do we see price doing? Price needs to do what? It always needs to retrace, right?
Going back to that previous support.
Correct. Correct. And that level is also a what? What do I have here? A what?
A daily, was the previous daily low or zone.
But it's also a what? Start with a K.
K.
What do I say to mark off when you come to your charts?
Oh, key level.
Levels, exactly. Okay. So
well, it's a key level because it is a daily low, right? Well, it was a previous daily low, and also a 4 hour zone, right?
Correct. Price rejected once, rejected twice. We have a low, we have a lower low, lower low than that. Now we have a high. I know price needs to respect this area. Now, because GU likes to make a deep retrace, the next entry for sells needs to be either down here or at the next rejection level up here somewhere. So if we press this next candle, it rejected it.
There you go.
Right. But if
It
it
could have been.
if it breaks the low, leaves a top wick and breaks the low, you can take that sell. Okay.
Breaks the low of that little the bullish candle, right?
Well, yeah,
So, right.
we're on the 30-minute. Ah, shit. It doesn't let us go back. This is why I hate using bar replay sometimes. We were in July or June of 2018, right?
No, I think October 29th, 2018.
October? Okay, let's go back to
Yeah.
October. So we're gonna come a little bit closer this time now because I don't want the chart to see when you drop down each time frame, it should move. So let's do it from January. Let's do January, right after the holidays. Booyaka. Okay. All right. So let's start over again. What do you see happening?
Definitely going back up, creating higher highs and higher lows.
So what's your bias?
Bias.
Very good. What's the next thing we should be looking for?
Key levels.
Okay, good. All right, so let's look for our key levels, right? So we see that price had a key level right here. Do you understand why I put my levels where I put them? Or
certain one, because I know, like, I know you want the most amount of touches, for every level.
okay.
But I know, like, I used to put it like more so on the wicks themselves.
Okay.
I know some of yours they kind of overlap the wicks and go on some of the bodies.
But do you see that my key levels are not at a specific price? It's in a zone, in a specific
yeah.
right? It's never to the T. It's always in a specific zone. Why? Because you don't know where price is going to go. It might tap here, and then drop, or and go up. So you don't really know to the T where it's going to reject from. So we're not psychic. We don't know where it's going to reject. So you have to put it in a general area of where you see the rejections happening from. A general area. That's why I put a zone around it, because I know if price comes to my zone, that's the area that I want to see some sort of reaction happen from. Or that's where I need to see price come back to. Same as supply and demand. Key levels is similar to, if not the same, to supply and demand. Okay, it collects price in a specific area. They want, the banks, whatever, they want to get the best entry, the best price entry to make the most profit. That's why sometimes you see a lot of liquidity grabs and you're like, well, why did price reject like that and leave that long ass wick? But sometimes those wicks are not random. It's coming back to a specific price for a reason. So you have to keep that in mind, okay? So, but I need to know for this example's sake, do you understand why I put this key level where I put it?
If it was me, I would probably put it a little higher.
There's one thing I'm looking for you to say as to why I put my key level there. And it right is right there, it's right in your face, plain as day.
A whole bunch of rejections.
A whole bunch of rejection, and then what? What else do you notice about where I put that key level? Look at above the key level. What do you see above it?
Wicks.
Above it. No. Above it. In this area right here. What do you see up here? What's happening?
Oh, just opportunity. Space.
Opportunity? No.
I won't say clear traffic, but
let me ask you this. Do you see any candles up here? Any wicks? Anything at all?
No.
No, exactly. Look at how many times price stayed below this level. It tried to come up, reject, 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 finally broke. Finally broke. I have a resistance that held for a very long time. Price has finally broken above, and now it's pushing up higher, above my key level. Now, back here, when price couldn't even sniff this area, now it's creeping up. So now I know that if price makes a higher high, it needs to come back to this key level or somewhere near it. Or somewhere near it. Over here, price stayed below this level, which meant price was maintaining a downtrend. Now that we've broken our last high, which was right, where's my marker here? Here. You see? We held resistance here. Every time price came, drop, came, drop, came, drop, came, drop, broke, retested, gone. That's why that's my key level. You have to train your eyes to be able to see that right away, because that's your landmark to tell you, hey, I need price to stay above this level. Because if it doesn't, we're going back down. But if I take all this off, and I look at the chart, because we're on a daily time frame, I gotta look here and see, oh, we broke, we retested, we broke, we tested it again, high, low, high, low, high. We're making higher highs and higher lows. And we're respecting the last level of support. Now, if you want to, you can take this and you can move it up, because you have to always be adjusting your zone, because price is moving. New candles are forming what? New market structure. So you can't leave your zone in one area, because that was yesterday's zone. Price is making plenty of new zones. So now you gotta adjust. Now I've adjusted my zone, and I say to myself, okay, price is here now. Well, looking left, price was once resistance, now it's holding as support. Look what price is doing, pushing down and closing up doji on the daily time frame. Weak bearish pressure. Look at how that candle is forming right now. Weak as fuck. Do I think this is gonna drop? No. Price is making new highs and it's respecting support. So if I was to take this buy right here, guess what my stop loss would be? Right below this low, right around here. Because I know if price tries to break below here, chances are it's probably going to come play around here. I needed to respect the last low. Look at where this wick rejected from. Where did it reject from?
The bottom of the support, pretty much.
The previous level of support. It's respecting support. The candles are going to tell you what the next one is going to do. It's telling you a story. Look at how the candle forms. Bearish drop, bearish. This candle looked like this at one point. Came down, look left. Oh shit, I can't come over here. This is support. I need to get my ass back up. Boop, 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 boop. Comes back up, leaves a long ass wick. If this next candle breaks this high and even tries to go bullish, I'm jumping in for the buys. Because I have all my confirmations. Market is pushing bullish, first confirmation. Candle close doji as support, second confirmation. Break of high, bullish close, third confirmation. If you have 3 to 4 confirmations, get in, get in, get in. Don't get overwhelmed. Don't get scared. Don't be like, oh shit, I don't know if it's gonna do this, do that. Have your plan in place. And when you see what you want to see happening, you enter the market and you take that trade. Okay, so let's break this down. Let's break this down, right? We have a high. We have a daily high here. Daily high. Daily low is down here. We don't have to mark that off. Okay, 4-hour time frame. Let's go to 4 hour. Oh, what do you know? What do you know? Close
after that second candle.
This is the wick. These bodies, that's the wick on the daily time frame. So we have this low. God damn, I keep losing my marker. We have this low, low, low. I could bust out my trend line and we would see the same thing. Okay. Now the market is doing pop, pop, pop. That's what I want to see happening. I want to see a new high being formed. High, low, high, low, high. We already have a low. We have this low, respecting this low. We have 1, 2, 2 4-hour candles breaking highs. Next candle pushing up. Guess what I'm doing? I'm not taking a buy here. I'm going to wait for the next candle to form, or this candle to form a bottom wick to show me that it's creating newfound support. And once it starts breaking its own high, I'm entering.
Then you get in.
I'm entering the trade. Okay. So let's go down to the 1 hour. 1 hour time frame. Boom. Okay. Push up, low, up, 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 up. Price is creating support, right? Support right here. We have a level of support. And look at where price is sleeping in, right at the last level right here. So guess what? I'm going to put a zone right there. Right there. Price breaks this high. I'm going for buys, and my stop loss is right down here. Now, let me ask you, before we move forward, why is my stop loss here and not down here?
Well, number one, you're trying to not make a stop loss a crazy amount of pips, but also if it breaks the previous low, the previous hour candle, then 9 out of 10 is probably gonna go back down.
Okay, good, good. We're not gonna take this trade because it's 4 o'clock in the afternoon, so we're gonna go to London session. So let's do that real quick.
Yeah, it looks like kind of low right there too, based on the candle sizes.
Okay. Remember, we had this zone right here.
Mm-hmm.
What did price do?
We tested it.
Respected it. So if we would have took these buys, would we have won?
Yeah.
Would have won. Correct. Now we're in London session. We have this level right here, right? Pull this across a little more. What do you see price doing? What do you see these hours?
Coming back down to retest it, and also the hour candles, they're rejecting it as well too.
Rejecting. It's rejecting. Okay. So you can either do one of two things. You can look for buys in this area here and get a better risk reward and put your stop loss below this zone here. Or you can wait for price to break this high. What do you want to do? I gotta put you on the spot.
I'm more conservative, so I think I'm gonna wait for it to break the highs.
They're gonna be conservative. Okay, cool.
Yeah.
So let's put our trade there. Do it there. Long position. TP will be at our last resistance, which is right here. Okay. So, and where's your stop loss going to be?
I want to say it should depend on the candle itself. I can't say yet, but somewhere below, well, somewhere in the body, in the wick range of those bearish candles. But it depends on how the next candles form, honestly.
Depends on where you activate it, correct?
Yeah.
Okay. Are you in the trade now?
Yep.
Where's your stop loss?
Blue, that bullish candles. Yeah. Mm-hmm.
Right here?
Yeah.
Right there?
Yeah.
Okay. That's your stop loss and that's your TP.
Mm-hmm.
All right, moment of truth. Yes, sir.
There we go.
Yes, sir. It took a while, but we won the
First winning trade.
Very good. Very good. Very good. All right. So you tell me why you took that trade. What were your confirmations for taking that trade?
The fact that overall bias was bullish. That's number one. Number two, the fact that previous support was tested and wicks are showing that it was rejecting off that support.
Very good.
And number three would be the fact that the high was broken.
Very good. Very good. I am proud. So do you see how easy it is when you just read the charts and read the candles and put your levels at the right spots? Very good. Proud of you. If you can do that
Thank you.
over and over and over every day, guess what? You don't
Should be
need
good.
no one-on-ones from me. You'll be able to do it all by yourself. Okay? It's not hard, Kurt. I think it's your confidence. Like, I think you have me here with you, so you feel a little bit, you have me breaking it down for you, so you feel like you have somebody with you. But you're gonna have to be able to do this by yourself.
Yeah, true.
You have to just exactly the way you just broke it down to me, break it down to yourself like that when you're on the charts. That's it. It's not hard at all. It's not hard. And I'm not gonna go beginner with you because we've been at this for a while.
Yeah, of course.
You're right where you need to be. All right. So market is bullish, so it's pushing up right here. Just out of curiosity, let's see where it goes here. Wow. What do you?
That's the runner. So that's TP1, and then the high right there would have been TP2.
Yes. Created a new high. So now it made a new high, right? Now it needs to do what? It needs to retrace.
Mm-hmm.
But let's see if it respects this level here, right? We had this level here as our first TP. Does it respect it?
Shot through it.
Broke through, and then it what?
Retested it.
Tested and pushed down. This is still a key level.
Mm-hmm.
Still a key level. You have a bearish engulfing. You have a strong pullback. My thing is though, is the market rejecting at this point? Because tap. It could be just retracing the push up. What is this next candle do? Okay, so it just retraced. It just retraced and it pushed up. But you see why I said this is still a key level? Look at where price pushed up from.
Same spot.
The same area, same level. So you also have to know when it's a key level, when it's not a key level anymore, and when it is a key level. Because you could have just as easily looked at that and said, oh shit, price just broke right through. So let me put up here, let me put it up here, right? Because you're looking to put it at areas of major reaction.
Mm-hmm.
But if you would have left it here, you would have said to yourself, okay, if price stays below here, I know I'm still looking for sells because that's my key level. But if it breaks above, I'm going in for the buys. Why? Because it's respecting my key level and the market is bullish. Just those two confirmations alone is why I would take buys there. And it should continue up here. Bye-bye. Gone. I didn't even know. I already knew it was gone after that. Gone. I should be a swing trader the way I analyze these charts, but I ain't got time for that. Okay. So, I mean, we could do this all day. We could do breakdowns all day long, but you gotta just backtest. That's all it takes, man. Backtesting. Do you have anything specific you want to talk about before, we wrap it?
I think I got a pretty good foundation. I think as I start backtesting, things will probably pop up, things will probably come to me. Right now, I think this is the foundation that I needed to retrain my mind with. You know what I'm saying?
Yeah. Okay. Well, I recorded it for you. I'll email it to you when it's done so you can watch it back.
Okay.
But, are you trading tomorrow? You trading tomorrow?
Yeah, I'm mark up GU now, and then see what it look like.
Let's break it down right now. Well, we already did.
All right.
We already did. Remember we did it when we first started the session?
Oh yeah, true. We saw that it was
we were looking for,
it was bearish.
Yeah, we were looking for buy retracement. So if this continues up here, we're looking for buys right around this area here.
We never dropped down though. I think we stayed on 4 hour. We never dropped down to M30 or H1.
Only because we don't really need to. If you don't really see it, like for instance, if you look at the 4 hour, like look at this 4 hour candle. Look at this one. Not a lot of volume. Whenever I see that on the 4 hour, I don't even bother because you're only gonna see tiny baby candles just doing this.
Yeah.
You see what I'm saying? Look, it's a waste of time. There's nothing happening right now, so it's not doing anything. We still know that the market is, doing that, which is fine. But it's bearish. We want to look for sells, of course. But right now, I would wait for a little bit of a pullback right around potentially here in this area. I would want to
look at that too.
Yeah. See,
so you can do two things. Either it can reject it or it can break through it and then find support and move up.
Yeah. Most likely it's probably gonna continue down because retracement is in order, but always trade what you see. You never trade what you think, oh shit, the market's dropping. You ever seen people take trades where the market is tanking and people jump in for buys because they're like, it has to retrace at some point?
Yeah.
Keeps on tanking on.
They're trying to over predict it.
Exactly.
Okay, so this scenario then. So we're looking for sales. If, say for instance, okay, the market price goes up to the top of the arrow we have the elbow at, hits there, and then creates bearish engulfing. Would you get in at that moment once it rejects that key zone, or would you wait till it breaks the low of the area where you're at now?
You tell me. What are your confirmation? I know the answer to that question, but you tell me. Your confirmation. You're already looking for sells.
Yeah, we know. Yeah, exactly. We know a downtrending market.
What did I say in the beginning of the session? You make a plan, and when you see what you wanted to see happen on your plan, you execute. If we already broke this down and we said, okay, we're waiting for price to pull back to make a high. If we get a high rejection and we know we're bearish and price starts to break supports, I'm looking for sells.
Let me go down. Yeah, true.
That's it.
That's it.
Now,
yeah, keep it simple.
Now, whether or not you want to wait for the impulse entry or you want to take, yeah.
So the impulse would be to get in the sale once price breaks below Correct. Whatever candle forms are there. Correct. And then the conservative entry would be to wait till price gets down right where price is right now, pretty much, and breaks the low of those candles.
Correct. Remember, the longer you wait to enter, the bigger your stop loss. So you want to keep the reward manageable. Okay. So
okay.
By you asking me that, it tells me you're still not that confident, but that's okay. It takes time. It takes time. Trust me.
Because remember, you got the aggressive traders and you got the conservative traders. So like kind of in the middle.
Yeah.
It's like
it takes time.
Take it there.
It takes time, but you'll be fine. You'll be fine. I feel I need to do more live trade sessions. I haven't done one in a long time. I might do one this week. We'll see. Yeah, I'm gonna do another live, but the problem is I trade gold. I don't trade GJ or GU anymore.
Yeah, no, but I tried. From working with you for a little minute, I'll trade gold as well too. I'll trade both.
Okay.
I got gold, GU, and SPX. And surprisingly, on and Henko, SPX is actually really low. The spread, like 6 pips.
The spreads on Henko are low. That's why I tell everybody go to that broker.
So
because the spreads they're great. You can't beat the spreads on Henko.
Exactly.
So yeah, I recorded it for you. I'm gonna send it to you. When I do a live trade, I'll let you guys know. I'll send it private to you guys. I won't do it for everybody, just for special group. I'll let you guys know, and then you'll be able to see me do a whole breakdown, take the entries and everything, and you'll see what I'm looking for. I'll break everything down for you to be able to understand, and then I'll record it so you guys can have it to rewatch. Okay.
Sounds good.
All right, man.
Just more back testing. Hey, I appreciate it.
Definitely.
Thank you very much.
Definitely. Tell Steven to get on the game. He's sleeping, man.
That boy's feeling his belly right now.
Yeah.
All right, DJ.
All right, y'all. Thank you for the gems.
You got it.
Indeed.
Yeah. I'll catch you later.
I see ya.
All right, DJ.
All right, tomorrow.
Yeah, tomorrow. Let's get another win on gold tomorrow.
That's mad.
Hey, how do I get in that gold to the group?
Hey,
I'm gonna gotta pay.
link in the bio, kid. Link in
Link
the
in the bio. Click it.
link in
IG?
the bio.
Yeah, yeah.
Okay. All right. Say no more.
Yeah. All right, boys.
right.
Have a good night.
All right, yeah.
All right. Take care.